Mickey Dickey with this week's market update. Now, depending on how today, Friday, ends, we're looking at roughly a 3.4% increase in the NASDAQ, a 1.4% increase in the Dow, and a 1.6% increase in the S&P, which is solid. Now, today's down a little bit, and that's okay because we've had 4 days of the NASDAQ being up and about 3 days in a row of the S&P and the Dow being up. So having a little pullback here is not a big deal. Which part of it is the banks. The banks came out today and they gave in-line numbers from what they were anticipated to be. And of course, Jamie had his most recent update on what he thinks is going to happen, and his central case or base case is that we're going to have a mild recession, which, I guess it depends on what a recession is to you. There's a section of our economy that, live in a recession, or what most of us consider recession, every day. They, depending on, doesn't matter what the stock market does or what the economy is, they live paycheck to paycheck, and that's basically a recession and difficult times every single day. We also have another section of our economy that, on a day-to-day basis, they don't recognize anything that's going on. Their question is whether they're going to spend 30 or 31 days in Bora Bora. Now, again, I'm not complaining about either one of them, but the majority of us live in the middle somewhere. And, whether there's a true recession or whether there's a slowdown or whatever, it's all degrees of the different, the same thing. So, but what I want to talk about is what I'm looking at and going forward numbers are. So today with the banks, we got exactly what we anticipated. The numbers basically were in line with what we expected, and the market's, taking that in line, kind of selling off a little bit because it kind of ran those numbers up going into the earnings session. So we won't really know how the market's going to react to the banks for another couple of weeks, because what'll happen is they'll digest this and they'll kind of anticipate it. What we do want to understand about this is if we think there's a recession type of an issue, which, you've got this out here now that says, 3% is the new 2% for the Fed. I don't think you're going to hear Jay Powell talking about this. Now, whether this is really going to be an issue or not, I do think this is going to be a topic of conversation for some time to come. But what I really want to focus on is one of the reasons the banks are falling is that people are considering that, hey, there's a recession coming. And typically banks don't do well in recessions because there's a lot of loan losses. There's a lot of other issues that become a problem for the banking situation. So you kind of have a weird dichotomy this time around with the banks, because they are making more money and more profitability with interest rates going up, but they've kind of stopped. Now, yes, the federal funds rate's going to go up a little bit more, but in the total scheme of things, as we've seen mortgage rates fall and some other parts of it, the bond market has been ahead of this curve, and it's not looking as far ahead and thinking that the Fed's going to go as high as they think they're going to go. But as far as the bank earnings, if they're right and there's truly a recession, then you've got to look at the bond market and how the bond market's looking at the interest rates. They're already discounting the fact that the Fed at some point is going to have to stop and they're going to have to go backwards. So if what we're really looking for is the market to become a problem and to turn backwards so that the Fed will stop and go backwards, then the banks are telling us what we want, what the Fed should want to hear, and the bond market is actually telling the Fed exactly the same thing, that you've done your job, it's time to stop, it's time to go back. Which again, I don't necessarily see that in the next Fed meeting or even the next two, but that doesn't mean that they're not thinking about it and looking at it and may go down the road. So as far as the market update, what I typically do on Fridays is look ahead to the next week earnings with the companies that are going to come out. Next week is not a huge earnings week. There are some good ones, and here's what I look at. And again, I don't look at these to buy or sell or do anything specific with them other than what they're going to tell me about the market. So as an example, there's nothing coming out on Monday that's of interest to me. Again, that doesn't mean that there aren't companies, that there isn't something coming out, but to me, there's just nothing I'm looking at. Tuesday, not a big day either, but what I am looking at is Goldman Sachs and Morgan Stanley. Now, somebody might say, well, you just got all the banks today. Well, we got the majority of the banks today, and we know what they all said. And what they all said is the consumer's strong. They think the economy's strong, that employment's strong, everything's strong, but they still think a recession's coming. So that doesn't really tell me anything other than what I already knew. And the question is, how does the market react to that? So we'll see how the market reacts. Morgan Stanley's a little different than the banks because it's not what you would call a traditional bank like Citigroup or JP Morgan. Their money is more in the wealth management side of things, and they've really been going further and further that direction. So it's going to be interesting for me to see how the wealth management side of that goes. And part of it is also the M&A. Now everybody says everything's bad. Well, at some point, the M&A part of Morgan Stanley and any of the investment business is going to run up the comps from last year, which weren't great. So which is going to make their numbers come around. So to me, it's going to be interesting to see. I don't expect this particular quarter to be a good one, and maybe even not the first quarter of this year. But at some point here, they're going to run into those numbers from last year, and it's going to really do very well, or should do well, because some of that stuff should pick up this year for Morgan Stanley. Same thing with Goldman Sachs. They've got a lot more of a wealth management side. Wednesday, you've got Schwab. Again, not a huge thing, but it kind of tells me more of what's going on the retail investor and where deposits are going, how investment is going on more of the retail side. Thursday's kind of the big day for the week for us. You've got Procter & Gamble coming out. You've got Netflix coming out. You've got PPG coming out. You've got Fastenal, and you've got American Airlines. Now, what's nice about that particular day is there's a wide variety of different companies, from tech to your consumer staples. What's going to be neat is to hear from Procter & Gamble is if they're seeing a drawdown or the consumer going from their main name product down to Kroger brand or Walmart brand or Costco brand. Do we see a lot of that going on? Fastenal is another, again, different section of the market. And then you've got American Airlines. Now we got Delta today, which was, somewhat disappointing, but they're saying everything is strong. So let's see what American Airlines does, because it hasn't had the uptick that we've gotten from Delta. And then Friday, you've got Ally Bank, and that's really about it. So next week's not a huge number. The following week, we've got some pretty big numbers coming up, pretty big names, Microsoft, Google, and so forth. So what I'm looking for in the next week is really kind of how the market digests what's happening in the bank and how the market kind of looks at what the bank said. Because again, the bank is giving, in my opinion, a very mixed message. And the mixed message is the consumer's strong, their balance sheets are strong, but they think there's a recession coming. Don't know if that means anything, but again, keep an eye on the bond market, keep an eye on how the market reacts to the recession and how they think it's going to react to the Fed. So next week should be a very interesting week. Keep an eye on that. If you have any other questions, talk to your financial advisor, and again, keep with your long-term plan. Nothing is happening today or tomorrow that's really going to affect the long-term of anybody's financial portfolio. If you're investing and you're concerned about what's going to happen next week, then again, don't invest. So just wait it out. And again, there's nothing wrong with having cash. Cash is an asset class, despite what anybody says. There's nothing wrong with having some of it. We did sell out of some things that we had this week. We had made some money on, and we're just going to sit on it until we decide that there's an opportunity down the road. Dickey out.